Voilà, ce panel sera en anglais également aussi. Je vous remercie d'utiliser vos casques d'interprétation simultanée si vous en avez besoin. Et je vous remercie d'accueillir sur scène avec moi Mr. Robert NEILL, Vice President, chargé des affaires internationales et conseiller juridique of the American Property and Casualty Insurance Association. Let's please give him a round of applause. Welcome to you, sir. Nous accueillons également Gabor JAIMES, spécialiste de l'assurance cybernétique, de l'assurance des biens et de l'assurance contre les risques naturels, Swiss Insurance Association. Let's please give him a round of applause. Welcome to you, Gabor. Nous accueillons également sur scène Monsieur Erik HARRIERO FARCOT, souscripteur de traités spécialisés, assureur et réassureur, International Reinsurance Beasley. Merci de lui donner un... Je me suis trompée sur le nom ? Ah, sur la photo, bah oui. Non, voici la bonne photo, mesdames et messieurs, de la personne réelle. Voilà, en fait, installez-vous juste à côté. Et nous faisons comme ça parfois des petits clins d'œil pour voir si notre audience nous suit. En tout cas, non. Mais c'est un très bon ami à lui, paraît-il. Donc ça va. Nous restons dans la famille, nous restons entre amis. Mesdames et messieurs, nous allons aussi accueillir Monsieur Afsar Ali, Cyber Risk Intelligence au Royaume-Uni, International Guy Carpenter. Merci de lui réserver un accueil chaleureux. Voilà. Welcome to you all. Cette discussion se passera en anglais aussi, donc encore une fois, je vous invite à utiliser vos casques de traduction simultanée, à lever la main si vous en avez besoin. I will switch to English now, gentlemen. Such a pleasure to have you with us here today. We have about 30 minutes for our conversation, so I know some of us also have flights, so we'll cover this very interesting topic. As I mentioned, I've been a consultant in cybersecurity before, so I'm very much looking forward to your insights. I'd like to start with you, Gabor. Could you please, so you lead the cyber property and natural hazards insurance practice at the Swiss Insurance Association, which represents the Switzerland-based insurance and reinsurance companies towards Swiss government authorities and in strategic markets and initiatives. Additionally, you are a board member of the Swiss Financial Sector Cybersecurity Center, advocating for improved preparedness in case of large-scale cyber threats. Could you please provide insights into the stages of development of cyber insurance across different markets? Petra has shared some insights about that, really interesting. And if you could additionally share any specific observations from the Swiss and European markets. Thank you so much.
Hi, thank you everyone. Thanks for staying till the end and joining this panel. Happy to be here from Switzerland. We heard yesterday, right, that we have participants from about 45 different nations attending this conference. And when it comes to the cyber insurance markets, there is a big difference on the maturity of the different markets. Robert will probably allude more about the US, similar like the UK, very well developed cyber insurance market already with decades of experience, expertise in that space. The European Union countries, or in Europe, continental Europe, in Switzerland, we have embarked a little bit later on that journey. We see it also on the market penetration. For instance, in Switzerland, we have a market penetration of about 7% for commercial cyber insurance. I think US and UK are comfortably in the double digits when it comes to medium and larger size companies. So this basically defines your starting point, right? If you have decades of experience with the product, you have a high penetration, the insurance industry has generated already quite a bit of trust in the market. And combined with the insurance industry's DNA, which is identifying risk, assessing it, manage it, designing the products that are needed by the consumers, you know, you're creating a strong voice to the public, to the businesses, and you need to leverage that, especially in cyber risk and cyber insurance, because the first step you can take, no matter at what stage you are in the development of the cyber insurance market, is to build awareness. It's building awareness with individuals, building awareness with companies, just to increase cyber literacy from the ground, or if it's already a little bit up, to keep increasing, because digitalization, and we heard the different threats today, they are emerging constantly. So you can't stop investing into that. Then, as you build your business, it becomes relevant that you collect the information from the market. I think yesterday there was also a presentation of the value of collecting data analytics, so that you can have clear facts of the market that you can use in your further communication. So coming to what is doing Switzerland about it, it is obvious that building awareness and promoting prevention measures are at the top of our agenda. And there we work really closely with the government, just as a PPP, public-private partnership, that we reach all corners of our country, of businesses, of individuals. And then we started to embark with the analytics. We collected the information quite quickly about the markets, and we went a step further, and we've modeled the market. We used one of the leading modeling companies to support us, to find out what is a potential economic loss from a cyber attack to Switzerland as a whole, as an economic loss, and how much would be actually insured in such a case. And obviously it demonstrated that the protection gap is still very high. Having all these analytics and these modeling outcomes now at your hand, it's important that you continue with the communication, continue with the dialogue with the various stakeholders. It's also important to get the media on board. Yesterday we've seen that there was a panel about the earthquake in Morocco. It is obvious that such a destructive earthquake, you can immediately show it on TV, and it goes into everybody's head what it can cause. Cyber risk and damages from cyber attacks are generally invisible. You can only see perhaps that the business next door went bankrupt one day, but you don't know maybe why. But the media is important to raise this awareness that cyber attacks are happening to any company of any size in any country. Well, I mean, that's a lot of a burden. I think it's important to know that the insurers or reinsurers are not alone. We have the brokers also on our side. We have a whole cyber ecosystem of IT service providers that need to be leveraged. And finally, I have to say, cooperating with other insurance associations that are ahead of us is very important, because it allows you to take bigger steps at a higher frequency to catch up, which is necessary to meet the demand in the market.
Thank you for sharing those thoughts with us. Indeed, raising awareness is a key component, as you mentioned, and we'll discuss a little bit further later on other topics. Over to you now, Erik. Why is cyber security so crucial today, and where do you see the most significant threats?
So, hello everyone, thank you. Thank you for coming. Well, I just brought my luggage with my computer, with all the information, personal information that I have there, and I want to see where it is. It is important. I mean, we, in a proper manner, individuals, we manage a level of data that probably a big computer of the 2000s could not ever handle or manage. So that means that we are transacting every day crucial information, financial information, personal data information, credit cards, bank account numbers in one device like our cell phones or even the computer that I have just in front of me. So yes, we at Beazley, I come from an insurance company. I work with my colleagues. We work always with my colleagues, brokers' colleagues. We split the threats in two crucial threats. So internal and external, outside, inside threats. So what are the internal threats that we see in the cyber market? Employee negligence, human errors. Did you know that the 50% of cyber incidents occurs due to human errors? This is something that probably people think that it happens only with hackers. It only happens with external threats, and it's not true. It's also human errors. Even in the digital era, in this revolutionary era, we are humans. We make mistakes. An example, very common example that can impact to a company in a high, in a economically, in a important manner. It's the common email you send to someone. You think it's the person that you are sending the email. Because sometimes when you just put in the Outlook address emails, you put the name, sometimes it appears, you start typing the name and you will see that it's the person you are addressing to. But sometimes it's not. Sometimes it's another person with the same name and you are sending probably financial information. This is a breach. This is an important breach that a human person, again, it's committing. So what are the external threats that we see at Beazley? The external are, as you may imagine, malware, hackers, ransom, all the business interruption that could just occur due to the malware or a hacker getting inside the systems. This is the other 50%. And I would just put an example of what's happening today, because cyber is not the future, cyber is the present, and I would even say the past. I will put an example. Beazley, where I come from, is probably one of the largest reinsurers in cyber risks. We know and we can get to the global data and losses ratio data worldwide. So we in Q3 2023 we had a loss ratio worldwide, let's say, on or about $800 billion US. Yeah. 3 months later, I mean, at the end of the 2023, we just got the loss information that was 1 trillion with T US dollars. So in 3 months, the increase was 200 million, billions again, billions. I'm saying well, billions of US dollars. So, yeah.
That's a significant amount indeed. Thank you for sharing that. I'd like to move to you, Robert, now. You are the Vice President, Head of International and Counsel for the American Property and Casualty Insurance Association. And prior to joining them, you spent over 10 years at the American Council of Life Insurers and also worked in the newly formed Federal Insurance Office in the U.S. Treasury Department. We'd love to hear the U.S. Perspective. Could you please describe recent cyber insurance market developments in the United States and how is the market evolving?
Absolutely. And first, I'd like to recognize my fellow colleagues, very pleased to be here, and recognize Bashir and Mohammed's and their team's hard work. An excellent conference, seems to get better every year. I'd also mention that the APCIA, where I work, is the chair of the Cyber Risk Working Group at the Global Federation of Insurance Associations, where we do work closely with our supervisory friends at the IAS. So I know several of both of those groups are here. So I'll get into a bit of what's going on in the US at the moment. The cyber insurance marketplace has largely stabilized. Ransomware attacks are continuing to dramatically increase, however. Cyber premium rates for the same coverage went from relatively flat in 2018 to peak growth of nearly 35% at the end of 2021, but have now dropped to near flat at a 0.07%. Overall, cyber premiums in the US are expected to reach $15 billion next year. Several cyber catastrophic bonds were issued last year, 7 in total, bringing additional capital to the market. We have new regulations in the US at the Securities and Exchange Commission that require all publicly traded companies to disclose cybersecurity breaches within 4 days. Ironically, these cyber attackers are the ones reporting breaches on the companies they attack, often timing their attacks on Friday to give businesses almost no days to respond if the businesses don't pay the cyber attackers. APCIA and the Council of Insurance Agents and Brokers have surveyed our members on potential gaps in the market. Most of our members believe that many of the current coverage gaps will be addressed in the long term, although the entities that are having difficulty obtaining adequate coverage include government, utilities, and healthcare. We're debating how to define truly catastrophic cyber events. There are particular concerns about critical infrastructure, such as power grids and water supply, as well as concerns about the aggregation of losses from a nation-state cyber attack on the US. But also briefly mention that in the US, the federal government's considering a federal cyber insurance backstop. Our member companies are still debating the appropriate role of the government in addressing any cyber market gaps, stressing that any involvement should be very narrowly tailored and not a risk-sharing mechanism like our current terrorism risk insurance program at the federal level, particularly since the cyber insurance market has now largely stabilized. In the US, the Federal Insurance Office has completed phase 1 of its assessment of catastrophic cyber coverage, including a report from the Government Accountability Office. And next steps and what they might consider are expected to take place following a conference slated for May 16th at Treasury in Washington, D.C. So APCIA, my employer, is fully engaged there and can certainly report back, but I'll wrap up now with that question.
Thank you so much. Thank you. We'll come back to you later to learn a little bit more about the report and the publication that the Global Federation of Insurance Association has recently published, and we're looking forward to that question as well. Now, over to you, Afsar Ali. You lead the Guy Carpenter's efforts in cyber risk intelligence for UK and international. My question is, given the dynamic nature of peril and how it is constantly evolving, how can cyber modeling help us understand the impact of systemic events?
Thank you very much, and thank you for having me here, everyone. So to answer your question, really, I think to provide a little bit of background, at Guy Carpenter, my efforts, or my colleagues and I, we are focused on the issue of cyber aggregation. So how can one systemic event really have a market-wide impact? And we've been doing a lot of work in regards of that to better understand how this peril can manifest itself systemically. Because for cyber insurance to prosper, we need to be able to quantify the peril in the most representative and most accurate way. So the way in which we do that is, the market has made a lot of efforts in this regard. We collaborate with a lot of modeling vendors as part of our efforts. And each of these modeling vendors have their own unique methodology to which they approach their efforts in understanding cyber aggregation. Now, one of the main questions that we get asked a lot, particularly in my line of work, is, which is the best vendor model? Which is the most correct one? In my eyes, I'd say that's a pretty unfair question and the most incorrect one to ask. I think, it's it's best understood in terms of what are the nuances of the vendor models. Do we understand their underlying methodology? Are we stress testing those assumptions? For us at Guy Carpenter, we believe in proposing a multi-vendor view, is trying to discern a view between all the vendor models and seeing where those nuances are and where those details are. And that's where you can really start to understand the benefits of aggregation modeling. Modeling in general is very much still in its infancy. I'd say when you look at the modeling background, the historical data is very scarce compared to what you would say on the NatCat side. And so these vendors, they have to work from a prospective basis. They have to look at the risk profiles and come up with a way to best make sense of future events that could transpire. So in that regard, the modeling landscape and the vendor models themselves, they've come quite some way in terms of understanding or interpreting firmographic information. Now, when I say firmographic information, what I mean by that is, what type of industries do these companies operate in? How much revenue do they generate? What are the technological dependencies within their systems? In that regard, I'd say the vendor models have come quite a fair way in standardizing their understanding across different industry verticals and how they behave and respond to different cyber events. For me, the next challenge, let's say in the next 5 to 10 years for these vendor models will be how transparent and how best a view can they showcase to us around key technological dependencies. Do we understand the type of third-party systems that are being deployed? Do we understand the business criticality of these systems? This will be the next challenge for these vendor models, and I would have to say, things are looking promising. We are collaborating very closely with the different vendor models, and it's a process that we will continue working on going forward.
Thank you for sharing that. These are all questions indeed that we have to look into. Thank you again. Gabor, coming back to you with this question, considering the significant protection gap that still exists, even in evolved markets and well-developed cyber insurance markets, what do you see as the next step to mitigate the impact of a large-scale cyber attack? And how can insurers and other stakeholders collaborate to address this challenge effectively?
Happy to give you an example again from Switzerland. We very often talk about preventive measures for a very single company, a business, a financial institution. But as we learn in this moment, cyber risk by nature is systemic, and several businesses or financial institutions, major financial institutions in a country can be affected simultaneously. So basically the next step of protecting the economy is to have a collective preparedness, very similar to what we've heard yesterday with the earthquake risk, right? If you are not prepared, if you're not well prepared for something that you know that can happen in the next years or any moment actually, then you've lost, especially in cyber. Every hour that you can save with with good preparation, is to your benefit. So in Switzerland, we've taken a slightly different approach than in the European Union. In Switzerland, the National Cybersecurity Center has mandated the financial institutions, the banks, the insurance, the reinsurance companies, and believe me, there are a lot in Switzerland, to establish an association with the sole purpose of addressing this scenario, that several institutions are down for an extended amount of time. And that's the Financial Sector Cybersecurity Center. So it's in our hands to prepare procedures or a crisis organization, crisis response plans that are effective, so that within a reasonable amount of time, the operation of these institutions can be up to speed again. And having said that, just next month there will be a national cyber exercise in Switzerland when all these financial institutions come together. It's generally the C-levels of these companies and run some of these extreme scenarios according to our playbooks that we have prepared and see whether they're effective enough. So this exercise will be then very relevant to then take the learnings and bring it back and improve these procedures. It's a dry run, it's theory, but we think something like this, you know, some outages of critical infrastructure, payment system, cloud providers, telecommunications, they can happen, and you have to be prepared for that, and you need to exercise, just like for any natural catastrophe type of a disaster.
Thank you so much. Really interesting to learn about this a dry run, as you said, but at a national level and involving all the C-level executive in the financial industry. I think this is definitely something we might want to consider and to prepare ourselves, as you said, preparing ourselves as much as possible. Thank you so much. Erik, we heard about some of the regulations in Petra's keynote, and I'm wondering, how do third-party and local regulations affect cyber insurance coverage? Specifically, how do laws like GDPR, and we've been working on that a lot, how do they impact corporations' vulnerability to data breaches?
Well, thank you. So, well, corporations thinks always in first liability, like business interruption, property damage, losses. So the big impact of the business interruption, we know. But one of the most probably important or relevant loss for a company could be the liability. So the loss of that, the loss of data information for a company could arise in penalties, fines and penalties, in a level of a total loss. And some of the medium and small companies in the last year did close their business because the lack and the loss of data, personal information of their clients, of course, of the customers, of the employees as well, as you might know. And so it's the main reason why regulators are trying to protect their people, their citizens with that. I mean, regulator. It's important to know that most of the Western countries are already implementing from the government this type of regulation and laws. This is something that will occur in a similar manner in all worldwide, in all countries, not just in Western countries. We know the GDPR imposed by the European Union, that it's just being imposed in every of the European Union countries. Just to put you an example that I think it's interesting, a real example, occurred in COVID-19. And I say COVID-19 because it was probably the most exposed digital era that we ever had in cyber crimes. So this is a real example of a big company in Europe. I won't say the name. I won't incur in confidential issues. So this big company, a prestigious company, just was hacked. So the hacker just get inside their systems. As you can imagine, a big airline company has a lot of information from their customers. I would say thousands of that. So this attack should be notified immediately to the regulator. They didn't because probably they thought that their image was going to be, maybe for image reasons, they didn't notify. So this cost to the airline company on or about, let's say, we don't know the exact numbers, but on or about 180 million euros, sorry. So this is not the only thing that they need to do to notify to all the affected or unaffected customers. They also need to pay all the fraudulent transactions that just the hackers made with their credit cards, with the information of the bank account numbers and everything. So it is important to follow the local regulations. It is very important to follow the protocol when a cyber crime appears, when a company is hacked or is attacked. So this is the main. issue right now.
That's a good reminder for everyone indeed to follow the regulation and the protocol in case a breach happens. Thank you again for sharing that real life example. Robert, I understand that the Global Federation of Insurance Association recently published a report on protection gaps, including those in cyber risks. Could you walk us through some of the main findings regarding the cyber protection gap and the potential levers that were identified for private and public stakeholders to use to address the protection gap?
Absolutely, and JIFIA's report actually covers a variety of protection gaps, including cyber, so folks can take a look at it on the JIFIA site, and I know that our supervisors at the IAS have also been working on protection gaps, so just mention that as well. But with respect to the JIFIA report, cyber risks are growing in frequency, severity, and variety, and insurers and governments are thinking about how to address related protection gaps. The increasing presence of technology and exponential use of data in almost all aspects of life is a global phenomenon. The number, severity, and types of cyber attacks have grown globally. Insurers and other private and public stakeholders are working to address the increasing need for cybersecurity and related financial protection. However, the market is still relatively nascent, especially in terms of the evolving regulatory environment and the developing awareness of cybersecurity and prevention measures, and in terms of the rapidly evolving nature of both the technology landscape and the nature of the threats. The Global Federation of Insurance Associations explored the implications of the cyber protection gap in its recent report, Global Protection Gaps and Recommendations for Filling Them. It noted that the U.S. is the largest cyber insurance market, accounting for roughly 70% of global cyber gross written premium. Although increased loss ratios in recent years have made insurers reconsider their cyber underwriting policies and risk appetites, the supply of cyber insurance in terms of gross written premium is growing and is expected to reach $13 to $25 billion by 2025. With the increase in technology and digitalization, annual economic losses from cyber incidents are estimated at over $0.9 trillion. However, due to the small share of insured losses, the estimated protection gap remains approximately near that. Although the supply of cyber insurance is expected to grow, it's unlikely that the cyber protection gap will be closed soon due to the small share of insured losses today and the rapid speed of digitalization, making businesses increasingly vulnerable to cyber attacks. Furthermore, since they are dependent on the regulatory environment and public cybersecurity infrastructure, insurers will not be able to narrow the cyber protection gap alone, particularly for potentially systemic cyber risks, meaning private and public stakeholders need to collaborate to address the fast-growing cyber protection gap. Individuals and organizations need to seek cyber protection and proactively engage in prevention. Various levers exist for private and public stakeholders to use to address the protection gap, however. These include incentivizing and supporting prevention, conducting awareness campaigns, developing incident reporting frameworks, and fostering adaptation measures. So I'll wrap up with that. Thanks.
Thank you so much for sharing some of these findings. Again, as mentioned by Robert, we can find the full publication on their website. As a wrap-up for this panel discussion, Afsar, I'd like to give the final question to you. We touched on the systemic nature of peril. Do we really understand what a global cyber catastrophe event would look like for the industry? Could you share your perspective on that?
Yeah, no, certainly. I think, again, just going back very quickly to recap, as I mentioned, historical data is quite scarce for cyber incidents. And so we have to be very prospective, very forward-looking in how we approach systemic cyber catastrophe modeling. Now, if we were to have, any sort of reference point from the past, the only two events that we could potentially call a CAT event would be WannaCry and NotPetya, which occurred in 2017. Now, those two events were quite significant in the market. It really opened up everyone's eyes to the potential for cyber to aggregate as a peril. There's been a lot of talk about protection gap, and I think one useful data point for everyone to refer to is when you look at NotPetya, the reported economic loss from that event was approximately $10 million. So that was the economic loss. If you were to distill that down and try and observe how much of that loss was picked up by the insurance market, that would be approximately $3 billion. Now, that's the insurance market as a whole. If we were to go down another step lower and see how much of that loss is then picked up by the cyber insurance market, it picked up roughly 10% of that, so around $300 million approximately. So if you want a reference point for protection gap, that's a good example as any that we have. But that being said, that's the only reference point that we have at our disposal. And so us, or here at Guy Carpenter, what we wanted to do is we wanted to model the global cyber insurance market to see what the potential losses could look like. And so this is where we collaborated very closely with our vendor model partners to come to two different views. First of which is, what is the size of the global market? The size as of last year, for 2023, we quantified the market to be approximately $14.3 billion. The US market comprises roughly $9 billion, and the international market at $5 billion. So that gives you an idea of what the spread looks like. When we carry out the modeling, the results were quite interesting. What we noticed was that for a 1 in 200 systemic loss, it should not exceed more than $33 billion. So to put that into context, and I know these are very big numbers, you're looking at a loss ratio of around 230% loss ratio at the tail. Now, is that a good thing? Is that a bad thing? You know, again, it's all about context and contextualizing your data. We carried out a similar study 5 years ago, and the loss ratio that we were looking at the time was just over 500%. So what does that really tell us? It tells us that the modeling view has improved over the past 5 years. There is much less volatility in the risk, and the vendor models are slowly coming to a view of what the tail looks like. Of course, there are many areas of divergence and convergence that we could still distill down into, and how that tail view is influenced, given the fact that different regions across the world, from the US to the international markets, they all have different appetites in how they approach cyber and the type of coverages that they offer. And so that will particularly the international side will then balance the global view with a diversifying effect, because we do see differences in appetite across the UK, continental Europe, APAC, and the rest of the world. And so that's something that we are looking to investigate further into the future. I think as far as estimations goes, for this year, we're looking at a global premium of about $15.8 billion as well. So that will be the reference point for the year going forward, really.
Thank you. That's an interesting figure to keep in mind. Well, ladies and gentlemen, I'd like us all to give them a round of applause, and thank you all so very much for being with us for this 10th edition of the Rendez-vous de Casablanca. Thank you very much.